Hello everybody, welcome to Bitcoin Not Crypto. I'm Forrest Hodel on Twitter X, and in today's video I'm going to be talking about what would happen if MicroStrategy lent out some of their Bitcoin and earned interest on it, just like Mara has done recently. Yesterday I released a video talking about how Mara is lending out 16% of their Bitcoin holdings. I calculated a little bit of what their interest rate could possibly be, and I'm going to put that onto MicroStrategy, and let's hop into these numbers. But before we do, I'm going to tell you about Bitcoin Well, which is where I buy all of my Bitcoin. They're non-custodial. They have non-KYC options, lowest spreads in Canada and the US. And if you use my code in the description, you'll get some free Bitcoin. Sign up, goes to support this show. Thank you very much. Thank you for listening and watching to this ad. And let's get into the video. Okay, so these are kind of my numbers here for Mara. And once again, just watch that other video if you want to figure that out. Let's take a look at MicroStrategy itself. So MicroStrategy holds right now 447,470 Bitcoin, an incredible amount. So if we calculated based on what Mara is doing, Mara is lending out 16% of their holdings. So if MicroStrategy was to lend out 16% of their holdings, it would be 71,595 Bitcoin, which is worth and this is calculated off of a price at the end of Q4. I just kind of did it the same as I did for the Mara one. So that equals $6.689 billion. It's worth a little bit more now because Bitcoin's price has gone up. That was calculated off of a Bitcoin price of 93,429. And if we take a look here, this 2.26% interest rate is kind of what I calculated for Mara. It's pretty inaccurate, but so it's actually probably higher than that. It's probably closer to like 3 or something like that, because the US Fed fund rate right now is 4.5. So what could somebody earn from their Bitcoin? Well, Bitcoin isn't fully institutionalized, especially for lending and borrowing. So maybe it's not worth as much as dollars are, which is kind of crazy to me. And I think so what's going to be happening is interest rates are going to be more connected to Bitcoin, and Bitcoin is going to actually drive some of this into the future, especially as Bitcoin becomes more and more important as a base layer money, in my opinion. So if we look at this though, if we look at this rate, which is low, 2.26%, if they earned that in interest income for 16% of their holdings, they would earn $151 million a year. Now, if they lent out 100% of their Bitcoin, which is just absolutely insane, of course, no company would ever do this. They have $41.8 billion worth of Bitcoin. This equates to almost $1 billion of earnings in interest income a year at a 2.26% rate. This is $944 million. So let's do earnings per share based on the 16%. So 16% is much safer, right? Because there's risk. As soon as you lend out Bitcoin, as soon as it's not in your self-custody, you've taken on risk. But you earn a reward for that risk, right? So you have to evaluate that risk. And part of evaluating risk is position size. So they take a lot more risk on if they were to lend out 100% of their Bitcoin than if they were to lend out 16% of their Bitcoin. Right. And we take on risk as shareholders of MicroStrategy as well, because MicroStrategy is the owner of that Bitcoin, and they take on risk because they have a custodian of that Bitcoin, which is Coinbase and Fidelity, and they've position sized their Bitcoin around to different custodians to try to lower the risk as well. So we have to understand there's risk to investing, of course, and the lowest risk option of owning something, in my opinion, is Bitcoin, because of how it's performed in history and because of the amount of catalyst for it going into the future, blah, blah, blah. But anyway, so we're talking about MicroStrategy here. So earnings per share per quarter for basic shares outstanding. So that doesn't include assumed diluted shares. So it's not going to be accurate into the future. It also doesn't, I don't think it includes maybe preferred. I'm not 100% sure. Like, this is kind of my first time doing this type of calculation. So what I've done here is I've done this calculation off of basic shares outstanding. So if that's incorrect or if that needs adjustment, you can switch out these numbers as well and do this calculation yourself in that way. So the interest earnings for 16% of the holdings is 6,689,000,000, right? Or 6.689 billion. I've divided that by 4. It equals 1.67 billion. So that's going to be earnings per share per quarter, right? So that's why I've divided it by 4. So the interest income, and then you divide that by the shares outstanding. The shares outstanding here, 245,778,000, and that gives us an earning per share per quarter. If they just lent out 16% at this really measly interest rate of 2.26, their earnings per share just from this alone, not from the price appreciation of Bitcoin with FASB, just from interest income based off of this, would be $6.79 per quarter. That's crazy, because their earnings per share, their EPS, has been negative for a long time because of the accounting mechanism that basically that Bitcoin fell into, the accounting bucket, the asset bucket that it fell into, which was indefinite intangible asset. Now it's treated a lot more fairly. It's treated based on its price appreciation throughout the quarter or depreciation, so it can be accounted for equally. If MicroStrategy did this today, this could be something that they would be earning. I think in the future, I think that interest rate is probably going to be higher. I think that the risk of loaning out Bitcoin, especially when MicroStrategy already doesn't necessarily hold their Bitcoin, they already have it in some sort of custodial situation. So if that was in that custodial situation and it just acted as collateral for somebody, and that other person was borrowing it just as collateral, not to own it, not to trade it, not to sell it, right? There could be these situations where there could be a relatively safe way to loan out Bitcoin. I know this is heresy to a lot of Bitcoiners out there, but these are businesses. We are already taking on risk investing in a Bitcoin business as opposed to Bitcoin, as I've stated. And I think that this is going to happen in the future. Of course, if you don't like it, don't invest in it. And, if you like what they're doing now, invest in it or whatever. And if they change that and if they start lending out their Bitcoin, then you can reevaluate or whatever. But I see this as a possible future where they are using their Bitcoin as collateral. They are earning some sort of interest income, and it could be huge for the bottom line, right? If they earned per quarter an extra $1.67 billion, how much Bitcoin does that buy? Well, it obviously matters about the price of Bitcoin, but that could add a lot of Bitcoin to their balance sheet every single quarter, right? Just from the interest rate that they are earning. So that's just another way for them to acquire Bitcoin. Or, people are always worried, oh, well, they're taking on debt, right? Well, their debt right now, their convertible debt, if we look at MST tracker, their convertible debt interest rate is 0.47%. Now they could pay that back. They could pay that interest rate that they have to pay. They've just they're going to be issuing preferred shares that pay a dividend. Well, they could pay that off. They could pay basically against the dividend with some interest income. So this opens up an income avenue for them that they just really haven't tapped yet. And I think it's because they don't want to take on the risk. I think they're waiting for infrastructure to grow. They are in their accumulation phase. This isn't something that they're not necessarily like a mature, flushed out, full Bitcoin bank that is earning interest from their Bitcoin. And like maybe they're just allowing the smaller fish in the pond, which is Mara, to test the waters, right? Like maybe the fish is growing some feet and they're dipping those toes in the water, right? This analogy is getting out of hand here, but maybe they're letting Mara just see how risky it is. Like Mara is lending out their Bitcoin to third parties. So I don't know what that means. I don't know who that is. We don't know what kind of risk they're taking on with that. But maybe if it turns out okay for Mara, maybe MicroStrategy could consider it, right? The Fred and Michael, I'm sure they're talking. They're both, adapting the same sort of strategy: convertible bonds, buying Bitcoin, Bitcoin treasury company, all this stuff. I'm sure they have some sort of communication back and forth. And I'm sure the team at MicroStrategy knows about what Mara is doing with lending out 16% of their Bitcoin. They probably know the exact interest rate, unlike me, which is just going off this 2.26%. That is probably entirely inaccurate. However, so this is what I've learned here. This is what I have to share. I'm going to leave this up on the screen here so that you can take this information in. You could calculate your own, you just take out this interest rate and do these calculations again, but off of a different interest rate. And you could see how much they could make, and you could also change this percentage, of course, as well, the 16%. What if they did 20%, 25? What if they only did 10 or 5%, right? They de-risked by lower position size, right? So this is something to look into in the future, though. I think that MicroStrategy, this isn't the only way that MicroStrategy has not tapped their assets of Bitcoin. They have really just used Bitcoin as a store of value, which it's been incredible as, but it's completely untapped in so many ways that will be tapped in the future, I believe. That's why it's a powerful company, and it's a company that I personally hold. So maybe I'm a little biased here, but this is math. This math doesn't lie, except the numbers are possibly wrong. Besides that, though, these equations should be correct. And if we had the right numbers, we could really get down to the dollar amount. So these are rough estimates. Do not take these as, don't take those as concrete. Take them as sand right now, right? But sand is a vital key ingredient in concrete. So anyway, thanks everyone for watching. We'll see you on the next one. And appreciate y'all.